Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And as we speak, the markets are actually trying to make a smart comeback from the early morning dip that it had witnessed. So we have 2 hours left for trading session. Right now, if you look at the markets, they are at the positive territory, but not that much of a gain. Flat with a positive bias is what I can say. Looking at Nifty Bank, that one also has recovered very smartly from the day's lowest point. Right now, it had just broken into the positive territory. The advance decline ratio is still in the favor of the advances. 2 hours to go. Like I mentioned, hopefully we will be able to conquer some more new highs. Talking about the sectoral indices, the realty index, that's the top sectoral performer in today's trading session. 1.3% uptick coming in for the realty index, followed by FMCG, auto as well as IT. Remember that we are awaiting Maruti Suzuki's quarterly numbers, which we believe will be out anytime now. But followed by, you have also metal index that's under pressure today. Pharma is under pressure as well as energy sector. So this is the way how the sectoral performance is looking like in today's trading session, Vinny. But yes, markets at the benchmark level, pretty flat.
Pretty flat on the benchmark levels as of now. But let's get started with all the individual movers in trade on the back of news flows or on the back of technicals. And in the next 1 hour, we'll be taking all through all the stocks as well. On the technicals today, we have Sumeet Mulchhandani joining us in with us, while from the research team, we have Amakshi as well as Harsh joining in with us. A very good afternoon to all three of you all. And good afternoon to you as well, Cheryl. But let me start then with the first stock that we're going to be talking about, and that is Tata Consumers. This one reported its numbers last evening, and the key highlights that we saw coming in from the company was one, a double-digit growth that we saw overall in terms of revenue of around 14%, mainly aided by the 26% growth in the food business of the company. While one side we could watch out for is, the factor that they have lost market share in the Indian beverages business, though they have managed to see at least a volume growth over there of 3% as well. But market share is what they lost of around 113 basis points. Company has also highlighted that they have started to see some bit of a green shoot in the tea business, rural market also some bit of a recovery, at least is what they're starting to see. To talk more about that, today we were joined by the management of Tata Consumers as well. The MD and CEO of the company, Lloyd Metals, joined us talking about the path ahead, what will they be delivering in terms of growth going forward as well. Let's go across and listen into the management of Tata Consumers.
I do think this year will be a relatively easier year. Now again, I'm keeping my fingers crossed there. And international, more importantly, we've taken aggressive pricing and structural costs. So macro environment can't predict. I do think it will be less eventful than last year. But internally, we are very, very strongly focused on execution. Just to give you a perspective, right now we're in the top quartile of innovation. We will climb still higher. We said 4 million outlets. We'll be at 4 million. But more importantly, now that we've got a big portfolio, we're going to split our routes for food and beverages in all 10 lakh plus towns. So that will provide extra focus. We've got strong internal numbers. We will continue to deliver double-digit growth and flow that down to the bottom line. And more importantly, we are looking at market share gains as well this year. I expect that tea costs will trend marginally lower if there are no unforeseen climatic things like droughts and floods, etc. That should aid margins. Ishko, which is our ready-to-drink business, is now 600 crores plus. Just to put it in perspective, when we bought out PepsiCo's stake in end of FY20, it was 180 crores. So from 180, we've now reached 600, and we're still not where we should be. We're still expanding aggressively.
As the exclusive interaction that we have with Tata Consumer Management post their earnings, you can find that particular interview on our social media platforms. So also through the course of the day, we'll be playing out that interview. But let's move on and let's talk about Gujarat-based PSU companies. And all of these companies are in focus in today's trading session. Barring Gujarat Gas, all the other 6 listed state PSUs of Gujarat surged between 7% to 20% in today's trading session. And why is this jump coming on all of these counters? This is because this after Gujarat on Tuesday mandated 30% of the profit after tax of 5% of or the net worth as the minimum threshold of dividend declared for the shareholders. Every state PSU with net worth of about 2,000 crore rupees and cash and bank balance of about 1,000 crore rupees are asked to exercise the option of share buyback. The PSUs are mandated to split shares when market price of the company's shares exceed 50 times of its values, and also PSUs to issue bonus shares if their defined reserves and surplus is equal to or more than 10 times of its paid-up share capital. So these are the rules that the state of Gujarat had actually come out with yesterday. So on back of that, you have all the Gujarat-based PSUs surging in trade. You have Kotak Mahindra AMC who said that there is more clarity to minority shareholders and scope to improve governance on back of this particular development. And it's not just Gujarat-based companies, that is Gujarat Industries Power or Gujarat State Fertilizer, Gujarat Mineral Development, they all are soaring above 15%, and other state PSUs were up between 7% to 10% on this particular development. So as you can see on your screen, Gujarat-based PSU companies soaring in trade on back of their move coming in from the Gujarat state.
Absolutely, what a move coming in all these names, right? But Sumeet, you have picked out one of these stocks for us, and that's GSFC, Gujarat State Fertilizer Company. What are the charts for this one today? Obviously, we are seeing a great move coming in, but even in the last month as well, last 6 months, GSFC has actually managed to see a decent move. Is this just the beginning of the run-up after the announcement has come in terms of news flow as well?
Yeah, hi, good afternoon to all. So, as today the new guidelines were done from the Gujarat government for the state-based PSU banks. So all the stock related to the PSU has given a good gap up today, and the main thing is they are sustaining. So among this, if we see the technical chart of GSFC, it has made a strong base around the levels of 115, and today the gap up is there. So it is looking more attractive than the other companies. So still today it is up by 15%, but we will advise to utilize all the dips in the coming sessions if you are seeing any. So accumulate the stock. We are expecting 162 to 175 levels in the coming sessions.
All right, and massaging 160 to 175 rupees per share target for Gujarat State Fertilizers as of now. But Vamakshi, coming to you, let's talk about IPCA Labs and why is this one in focus today as well?
Well, Cheryl, this stock is languishing in trade since the last two sessions. If we see over the last 3 days, the stock has fallen as much as 18%. And today, the stock is in focus after a note that has come in from Motilal Oswal. Well, they've downgraded their rating on the stock from buy to neutral. They've also trimmed their target price from 940 earlier to 760 per share. Now, they're highlighting that the outlook for the US generics business is looking at risk. They're also witnessing some increased competition in the oral solids US generics market. There has been no US FDA inspections at Unichem sites since February of 2020, and on the back of that, they've actually cut their FY24 as well as 25 EPS estimates by around 11.7 to 5% in order to factor in the Unichem acquisition, and they've also gone ahead and reduced the PE multiple to 21 times from 24 times. So given that, Motilal Oswal has actually downgraded its rating, cut its target price, and that is the reason why the stock is languishing in trade today.
Absolutely, languishing day coming in for IPCA Labs. Actually, the last couple of days have been quite subdued for IPCA Labs. Sumeet, not last couple of days, actually when I'm looking at the charts now, it's last couple of years. Nothing exciting for IPCA Labs has been there on the charts as well. Is there more correction coming in? The news flow that has come in as well. Street is not taking it too well. What are the charts indicating now?
We have two views here. Now, as per the Fibonacci levels, if we are drawing the level 690 is a good level to take the support here. But on the closing basis, if for the 2 days, if it is giving below the 690 level, we are expecting 610 or 620 levels. The main thing was the stock acquired the new company, and that was a negative news according to the market. So the market has given a good breakdown levels. So we are expecting more downside if sustained below 690 today's low.
All right, so that's the take coming in on IPCA Labs, but let's shift focus and let's talk about the flash on the bottom of the screen, and that is KPIT Tech. That one has come out with its earnings. If you look at the earnings right now, margins have definitely come in much lower than the street anticipation, while rest of the numbers seem to be in line. So the number for margins that they've posted is 17.9% as against 18.2% on a quarter-on-quarter basis, which actually also has seemed to have missed the estimates. If you look at the profit, it's coming at around 111 crore rupees as against ET now poll of 102 crore rupees. If you look at the EBITDA margin, like I mentioned, 17.9% is what is coming at, and we were expecting 18.9%. A miss coming in on the margin front there. You can see the stock price also react to that. If you look at the revenues, it's coming in at around 1,017 crore rupees. We were expecting it to come in at around 985 crore rupees. And the PAT, like I mentioned, is tad bit above, but margins is the one that is a miss. And rest all the numbers are meeting with the meeting the rest of the parameters. But like I said, Vinny, margins is definitely causing a concern.
Margin is causing a concern, and the stock had seen a bit of a correction, post JP Morgan initiated coverage on this one as well.
Yeah.
Though YTD the stock was up, but yes, some bit of a pressure is again we're starting to see on the stock. Let's watch out for more details on this one. Moving on, Harsh, and coming to you, Lloyd Metals is the stock that you've picked out for us today. What's the news for you?
Well, yes, results, Vinny. So we're seeing total income expanding a solid 161% on a year-on-year basis. Slightly muted when I'm looking at it quarter-on-quarter. In fact, 13% down sequentially, and you can see the reaction of that on the price, on the stock price on your screen. EBITDA though went up by around 184 crore, or rather went up to 184 crore, which is a 50% jump. Again, very healthy on a year-on-year basis, but again it's down nearly 30% on a sequential basis. We're seeing EBITDA margins come in at 20.4% versus the 36% margin that it posted same time last year. Now with volume, margins seem to be getting diluted. 25% was the margin in Q3 of this year as well. So you're seeing a bit of margin dilution or erosion happen there as well. PAT has gone up 120% year on year. Sequentially also PAT is up around 17%. So on the back of all of that, largely a tough set of numbers for Lloyd Metals, and you can see the stock down around 0.5% in trade.
That's Lloyd Metals for y'all. But let me talk about CG Consumers. We have spoken about this yesterday as well. But there was a con call that happened last evening, especially in terms of the leadership change. The management wanted to highlight on those points. And there are some key highlights that have actually come in. The leadership change is actually a part of the succession plan. Going forward, the company will continue to focus on improving its market position, capability building, greater ad spends as well, and brand building and manufacturing excellence is what they'll be focusing on. The company will be rebalancing margin versus top line. You know, they had been focusing a lot more on margins, but now they want to focus even on volume growth, as well as the top line is becoming the priority as well. So yes, they will be focusing on that. Promit Ghosh, who will be joining in as the MD and CEO, also said that his priority will be to strengthen the back end considerably, to monetize the investments in innovation, and more emphasis will be on digitization and automation as well. But when you look at it in terms of the street or the analysts, they're still not quite happy with that situation as well. They're not quite convinced, and that is why we're seeing that continued fall coming in for CG Consumers, Crumpton Green Consumers even today.
Yes, so that's the stock for you that is under pressure in today's trading session. But Sumeet, tell me, do you think this pressure will continue for CG Consumer Crumpton Greaves going ahead, or do you think that it will take a pause now and it will give time for investors to take a relook at this counter?
Now, after the company declared the new MD CEO, so market reacted negatively. In the last two sessions, 15% already it is down, and still it looks weak. Now, if we apply the FIBO, the next level we are expecting is 236. So stock can take support here. If we see a positive or the reversal sign, then only we will advise for the fresh buy, or else avoid the stock as of now.
Okay, avoid the stock as of now. That's the word coming in for CG Consumers, because even analysts were highlighting you're not too happy with it.
Absolutely. So that's the take coming in on CG Consumer. But one stock that you all must watch out for is Gland Pharma, and this is an ET Now exclusive. What we are picking up from the sources is that Fosun Pharma has withdrawn the plans to sell the stake in the company. So on back of that, you can see the stock seeing an uptick. Fosun, remember, has about 57.86% stake in the company. However, both of the companies did not respond to ET Now's queries on the fact that Fosun has withdrawn the share sale plan for Gland Pharma. Remember, 6 months ago, there were reports that said that they have initiated talks in order to looking to offload that stake in Gland Pharma. But what we picked up from our sources is that Fosun has now withdrawn their share sale plan. We have not heard from the management either, but this is what we are picking up from our sources. But also key to note is that Gland Pharma is now up about 19.7% since it hit a record low on March 19th. And today also the stock is holding on to gains of about 1.9% as we speak.
Okay, let's move on and talk about SBI cards on the chart. Sumeet, how are you looking at the charts for this one? This has not done much, over a period of time since the listing when you look at it in terms of the returns as well. Finally, do you think that, in the last 1 month that we've seen a slight bit of an uptick, that is an indication that we could expect a better move coming in from SBI cards going forward?
If you see, this is the fifth time the stock has bounced from the 700 level. Now, this time it has given a good trend line breakout along with the horizontal resistance also. So now 765 to 770, this is a strong resistance zone and can be seen as a support here also. So we are expecting inline result today. They have the results also. So if it happens, then more upside will be from the current market price. Current market is down 778. In the morning session, it was up by 3%. And if able to sustain above the 770 level, then next target will be 845 and 883. One can keep a stop loss of 730 here.
All right, so that's the take coming in on SBI card. But Vamakshi, MCX, that's the stock that is in focus today, and why is that?
Well, Cheryl, this counter is under pressure today, and that is after the company has announced that its Chief Technological Officer, Mr. Shashank Sathe, has tendered his resignation due to personal reasons. Now, in the interim, they will be appointing Dr. N. Rajendran as the chief, who is the Chief Digital Officer of the company, and he will be appointed as the interim CTO. The company has also said that Dr. N. Rajendran has been with it since November 2021. Now, apart from this, we're also seeing pressure on the stock on account of several factors. Now, the company has experienced significant delay in the implementation of the new TCS platform, which was supposed to go on 30th of September 2022. The company has extended contracts with existing software vendors 63 months up to June 30th, 2023, and this has come in at substantially higher cost, and analysts are in fact expecting a margin pressure of nearly 4 to 7 basis points on the back of that. So the CTO resigning is viewed by the street as a bit of a negative, and that is the reason the stock is under pressure today, down nearly 6.5%.
Okay, let's move on and talk about Page Industries on the charts. Sumeet, when you talk about it, just looking at the charts right now, 6 months back the stock was somewhere above the 50,000 mark. Now it's trading at around 40,000 levels, 40,800 to be precise. What should we be expecting from Page Industries? Do you think that 50,000 and above those levels is expected sometime soon from Page Industries?
Yeah, the stock has shown the good fall from the 54k levels almost, we can say. But nearby it has made a base around the 35,000. Now it has given a good breakout about the 39,000 levels, and we are expecting more upside here. So one can accumulate all the dips here for the target of 43,000 and 46,000.
All right, then moving on, Harsh, Mahindra CIE. This one also seems to be an earnings candidate, isn't it?
Yes, and buzzing and how, Cheryl. So we've seen very strong numbers coming in from Mahindra CIE. We saw revenue expand, a solid, let me pull out those numbers, sorry, a solid 18.5% on a year-on-year basis. And on the back of that, EBITDA also expanded, which was quite surprising. So EBITDA has come in better than expected. 36% higher on a year-on-year basis is the EBITDA. In fact, revenue expanded even sequentially, when estimates were really the revenue will not expand as much. Revenue was a beat. Margins came in 15.6% versus 13.6% same time last year. So a 200 basis point expansion in margins as well. And profit after tax therefore was aided by both those dual factors. And we saw PAT expand a solid 34% year on year to 220 crore. So we have favorable views coming in from brokerages as well, and on the back of that you can see the stock up and buzzing 8.5% higher.
Stock up and buzzing in trade after its Q4 numbers, and revenue rise surely supporting the numbers. But let's talk about RVNL, this railway stock. Actually the whole pack has been just a buzz, and RVNL specifically is up 45% week to date. When you look at it, the stock move has just been fabulous over the last month or so as well. Now, what are the factors that we could highlight in terms of a possible up move and a possible positive trigger for RVNL is that the Union Minister Danway says that this came in over the weekend, that efforts are going to be made on to start the Vande Bharat train production by August. Their tendering processes for a coach manufacturing is in the final stage as well, and contract processes are underway with Russia's consortium as well and RVNL. So surely that is some of the positive triggers there. Other than that, obviously when you look at it about RVNL and Russia's CJSC, the Transmash Holding L1 for manufacturing and maintenance of train sets. That contract is of around 58,000 crores, and that is to maintain and manufacture 200 train sets. So on the back of that, we've seen that RVNL is buzzing in trade, continues to see a run up today, up 4% in trade as well.
All right, let's take note of the flash on the bottom of your screen, and that is Union Bank. If you look at the counter, why is that one in focus? Is because the board had met today and they've approved raising about 10,100 crore rupees, and this will be via 2,100 crore will be via AT1 or Tier 2 bonds, and also the other 8,000 crore rupees will be via equity. So they've approved raising up to 8,000 crore rupees via equity, and as you can see, post that news development, the stock of Union Bank is near the day's highest point, 1.3% uptick coming in for Union Bank as we speak, Vinny.
Absolutely. Then let's move on and talk about RCF on the charts. Sumeet, how is this one looking like? What are you expecting in terms of a run-up for this one now?
On 12th of April show, we have discussed this stock, and it has given the good wedge, falling wedge breakout. So it got a profit booking area nearby the 110 levels, and today that was the highest volume in the recent months. So today the stock is again showing some good movement with good volume, and if it is able to sustain above or giving the closing above the 110 level, then we are expecting more upside till the 122, 136 level. So it is looks good to accumulate in this zone, and one can keep a stop loss of 102 here.
All right, that's a take coming on RCF and KPIT Tech. They've come out with their guidance right now, and they're saying they're expecting to see the constant currency revenue growth in the range of 27 to 30%, and this I believe is for FY24. They're saying the EBITDA margin to be in the range of 19% to 20%. Dollar revenue in Q4 stood at around $123.8 million. The company said that the debt in the books of Technica, which will be repaid over the next 3 quarters. But the guidance of KPIT Tech is what's come out right now, and they're seeing constant currency revenue growth in the range of 27 to 30%. EBITDA margin, they are expecting that to be in the range of 19% to 20%. So that's the key FY24 guidance coming in from KPIT Tech as we speak. And the stock is holding on to gains of about 2.3% as we speak, Winnie.
Absolutely. Surely we'll be keeping an eye out on that, because it seems like a good set of numbers that has come in from the company. The stock is up 2% as well, post the numbers. Not post the numbers, it was gaining since then. Yeah. But it did recover as well. So keeping an eye out on that one as well, Shadal.
Absolutely. Well, let's move on and let's talk about another earnings candidate, and that is Anant Raj. That particular counter came out with its numbers. If you look at the consolidated basis, the revenue from operations stood at around 280 crore rupees, which indicated an uptick of about 29.7% on a year-on-year basis. The EBITDA also saw a very healthy uptick, 74 crore rupees as against 25 crore rupees in the quarter gone by. Net profit is coming at around 48 crore rupees, which is actually over double on a year-on-year basis. 48 crore rupees versus 23 crore rupees last year. And EBITDA margin also, what an uptick on the EBITDA margin front, 26.3% versus 11.6% is what the EBITDA margin had come for Anant Raj. As you can see, the stock subdued up move in today's trading session. Right now, it is actually given up those gains. 0.7% downtick coming in for Anant Raj as we speak.
That is Anant Raj for you all. Keep an eye out on that one as well. But on that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with more stocks after this break.